Listen, I'm going to prepare you for Monday because I believe that what's about to happen is going to make a lot of people upset for not taking advantage of this opportunity. And I think there's going to be a lot of millionaires being made in the next few weeks. So let me show you exactly why I think that is. I'm going to go over the charts. We're going to talk about the NASDAQ. We're going to talk about a specific indicator that I combine with VIX to know when the bottom in the market is. And then we're gonna jump into some individual stocks that I'm looking at that have already made a massive play on going into next week. So let's go ahead and jump into it. As you can see, the portfolio is up quite a bit. I mean, we're now at 735K, up $13,000 just on the day because of this move, all right? And what we're seeing here in QQQ is actually some bullish structure. Now, there are so many people afraid right now. There are so many people still bearish on this market, thinking that the tariffs are going to just continue dragging this market down and that things are going to get worse, all right? But what they don't understand is that the market is future looking. So the market has already priced in the tariffs. It has already priced in the China 150% tariffs or whatever they are, the crazy amounts, right? And you could see that in the VIX, okay? The VIX spiked all the way up to 60, levels we haven't seen since August 5th, 2024. And then the last time was actually not even the bear market of 2022. The VIX didn't even get that high, it got to 39. The last time we saw the VIX this high was during the massive COVID crash, okay? So what we're seeing right now is fear actually subsiding. Fear is coming down. VIX is at 38 right now, which is still extremely elevated. There is still a lot of fear in the market, but this is the perfect time to take advantage of that fear because in the next few weeks, I believe that you'll look back at this and probably be like, I should have bought more. I should have, basically just looked at the VIX, taken advantage of the fear and made a little bit of money on the upside, okay? So that's basically what's happening right now. QQQ is forming some bullish structure here. We are seeing some higher lows, okay? We had that huge rally, obviously on, when was that, Monday? Actually, that was Wednesday. Wednesday, we went up 10%. It was crazy. I was at the gym. The market was like flat, came back, market was up 10% on 90-day tariff pause news, okay? Now, we gave up almost half that move yesterday, all right? And a lot of people getting short, getting bearish here, right? Short the rallies, that's what they always say. You got to short these pumps. And then what happens is that basically halfway through the day, we started to rally back again. And then today, we're up about 1.8% on the NASDAQ, on QQQ, all right? So we are seeing some higher lows, all right? And there's a specific indicator that I want to show you compared, in conjunction with the VIX that is showing me that right now is the time to buy. The probabilities of the market moving to the upside are extremely high, okay? Yes, could we get a downturn? Could we go all the way back down to the lows right back here that we hit on Monday? Sure, that's not out of the cards. The VIX is still above 30. So a 5 to 7% swing from here on the downside would not be out of the cards. But I'm not playing those cards because we have a lot further upside potential to take advantage of, right? We almost have 20% on the upside from here on QQQ versus the downside, okay? You only have about 11%. So I'm playing the upside here, considering that the news has already been, it's the worst it's been, right? There is no worse news that is coming out right now. So I'm playing those probabilities, and this is how I'm positioning my portfolio, okay? Now, before we jump into that special indicator that I combine now with VIX to basically confirm that the market has bottomed, if you do want to learn exactly how to make multiple six figures trading, that'll be in the first link in the description. We have clients that were up over 100K on Monday, more than me, which was absolutely crazy. Also, I do give away free trade ideas. If you want those, make sure to follow me on Instagram because I provide real live updates there. And I also provide trade ideas on my free newsletter. Those two links will be down below in the description as well. But let's go ahead and jump into the indicator that really helped me actually get into some QQQ leaps today, leaps call options, with pretty decent amount of size, okay? So what we're looking at here is the S5FI indicator. Now this is an index on TradingView. On different platforms, it might be called T2108, but right now I'm looking at the S5FI index. And what this shows is the S&P 500 stocks trading above their 50-day moving average, okay? And when this thing gets down here, that basically shows you that the entire S&P 500 is massively oversold. You know, almost 90% of stocks, 87% of stocks are trading below their 50-day moving average, okay? And the last time this has happened, all right, we're trading almost all the way down to these levels, currently trading at 13, right? You know, we saw one, literally a one level here back in 2022, okay? At the bottom, we double bottomed there in the 2022 bear market. And then we also saw these levels back during the COVID crash, March 2020, okay? So we are approaching levels we have not seen before since the bear market of 2022 and COVID. Stocks are very, very, very oversold here, okay? There comes a point to where stocks get so cheap that institutions, hedge funds, and retail traders decide that, hey, we're just gonna start buying up for the long term here, all right? And that's pretty much where we're at right now. If we look at the VIX levels, we'll go back to the VIX levels, all right? Again, levels we haven't seen since the COVID crash. And if we look at the daily chart on the VIX, this thing is retracting. Fear is subsiding. And like we looked at that study in the past two videos on Wednesday and on Monday, 85% of the move, or within 3 days, the VIX retracts 85% of this up move, okay? That's just based off studies. So forward returns are always higher when the VIX spikes. And that's how we've been able to make so much money. You know, how I've been able to grow the portfolio so fast is because I'm buying, right? I'm buying LEAPS, selling cash secured puts, getting assigned shares when the VIX is high and the market is low. We are still, again, very far from recovery here. So you're getting massive discounts, and now we have at least some bullish structure here, down still 15% on the NASDAQ, okay? At least we have bullish structure here, plus the news, the worst of it has pretty much been priced in, okay? So next week, I do believe that we are going to rally, especially closing today up 1.8%, 1.9%. We'll see where we close in the next 45 minutes. But I do see us surpassing 466 on QQQ. So we'll probably get up into this 460 to 484 range, right, before breaking above 484. So this is obviously the level that we have to pass tomorrow, on Monday or early next week. Once we get above that, potentially we will get some more FOMO buying of people who are like, okay, that's the bottom, and that'll push us above 484. Now, do I think we go straight up? Do I think we go straight, blast through all the way to all-time highs? No, I don't think so. I think what it's gonna look like is we blast through this level. Maybe we kind of trade in here for a little bit. We blast through this 484, and then I think we'll get up to the 500 level before taking a nice, maybe major pullback back down to 470, okay, before resuming upwards. So that is kind of what I'm looking at. That's how I'm playing it, kind of being nimble with the cash that I have right now, just kind of getting in and out, quick profits, getting assigned shares if need be at low prices, and then waiting for this market to recover. So let's talk about now what exactly I did on QQQ. So QQQ, again, the S5FI indicator showing me that we are very oversold on the S&P 500. The VIX being still above 30. This was pretty much the best time to kind of say, hey, I didn't catch the bottom as far as buying a LEAPS call option, but what I did do is I waited for a little bit of bullish structure, a little bit of confirmation to get into my trade. So today, we're gonna look at the portfolio, currently trading at 740K, 18K up. What I did was I purchased 3 June 18th, 2026 410 call options, okay? So they expire next year, 433 days, gave myself ample amount of room to be right and to hold on to these things. Purchase them when QQQ was at around 446. We're at 454. So I'm already up 5% on these, about $1,400. But I do plan on holding these until QQQ, right, gets up within this range that we talked about. So potentially to that 480. Once, if we hit a little bit of resistance at 484, I'll get out of these LEAPS options. And you're probably wondering, well, Ryan, why did you go so far out in time if you're only going to play these short term? Great question. Let's talk about that. So if I wanted to play it short term, I go to these options maybe, 70 days out. And sure, I pay less, right? For a 70 delta, I could go all the way up to the 70 delta. I pay $4,700 to control $45,000 worth of shares, right? 100 shares. So $4,700. But let's take a look at the theta decay, all right? Let's just say QQQ, hey, the worst happens. China says, you know what, 1,000% tariffs on the US. It retaliates, right? And then we head back down. Well, you're gonna be stuck in these, and these ones expire in 70 days. So you're probably gonna lose all your money on these with a black swan event happening. And the theta decay is $21 per day, 21.61. So you're losing $21 per day on these versus if I go out and I just pay for time, right? Pay for that extrinsic value. These ones that I purchased, or we'll just go up to the 70 delta. Okay, 70 delta would be, let's just see, let's just choose the 420 just to be kind of an even strike price. These would be $8,100. So you're paying like almost double what you would for those 70-day options. But if you look at the theta decay, these are decaying at $7.50 per day. So decaying about almost 3 times slower than the 70-day options. Plus you have time to be right just in case that black swan event does happen. So that's why I go out so far in time. So that's going to be my trade for next week if you wanted to participate. Obviously, your risk is break even would be if you bought those. We'll just go to the 420 strike because those would be the 70 delta. You pay $8,100. So basically in 433 days, QQQ has to be at $501 for you to break even on these, okay? Do you think that QQQ is gonna be at least $501 in a year and a half? I think so, okay? So you'd be fine on those. The worst case scenario, QQQ goes to 0 and we live in cardboard boxes and then you lose all your money on those call options, okay? But that's not very likely. So that is the risk on those, but that would be my play for next week if you wanted to participate in this up move because, really I could hold these longer if I want, but, we may have another kind of pullback that I could participate and grab them again and ride them up for the long term, okay? So that is my QQQ trade. If we go to Hood ran up quite a bit today, so the leaps here aren't looking quite good because, we're above that middle Bollinger Band line. So that is not going to be a play. I had a lot of people asking me about the Hood leaps. I'm up $4,000 on these, 15%. So it's not a good time to enter these. I think you pretty much missed your chance there if you're not willing to potentially see a downswing on these. So I don't like the Hood leaps right now for getting into them. It's a little bit too late. Palantir, on the other hand, is still looking good. Palantir wasn't up on the day. We're down 0.15%. So Palantir I'm liking for a nice leaps play because what we could see is if Palantir gets above this $90 level, okay, I think it'll go straight to 100. So you could play that $10 move or even play it into earnings for potentially, a 105 to 108 area. I think Palantir will probably get up here after earnings because let's be real, they've been securing all these partnerships during these times, during the crash, while no one's paying attention to Palantir. They're saying, Palantir is overvalued, this stock's going to 0, right? But actually it's been trading within this range ever since the crash happened, and it's been stronger than the market. So if I were to do some Palantir leaps, I already have the March 20th 80 call options. I've been in these for a while. I'm down 5%. But what I would do is just give myself some more time. I'd go out to June, and I'd go ahead and grab the 80 call options. Okay, so you'd have the same strike as me, just further out in time, by a few months, all right? So these you pay $3,000 for, 70 delta, they decay about $2.93 a day, and you have ample amount of room to be right on these. So that's gonna be my play for Palantir, as I'm liking this one, okay? The next one, let's take a look at Tesla. Tesla, I think, could be a massive LEAPS play here. Unfortunately, I have too much allocated to Tesla right now in my portfolio as far as shares go, so I cannot participate, but I do think this could be a massive, like this thing could pop up to 320 in 2 days situation on good news. So let's take a look at the options chain on Tesla, and then we'll leave it at that. So Tesla, I would go out 433 days, right? You can go to the 70 delta, which is the 230 strike. You're gonna pay $8,200 to control $25,000 worth of shares. And these ones are definitely gonna pay out. Mind you, there is earnings on the week of April 25th. So just keep that in mind. Earnings may come in weaker than expected, and maybe you play them if there's a small pullback on Tesla after earnings. So that's gonna be my last play, as I like where Tesla is at right now as far as long-term. I think this thing has massive room to go up. So I hope you enjoyed this video. Please give it a thumbs up if you like these update videos. I appreciate you being here, and I'll see you in the next one. Take care.